welcome to the Closing Beat, everybody. Happy Monday. How you doing out there? Hope all is well with you. Welcome to our show. We call it the Closing Beat. It's a quick stock market update show where we go over lots of geeky details, go over the markets and everything, try to use a lot of statistics, or just teach you something new that maybe you've never learned. We're an educational financial advisor, meaning we spend time teaching our customers. We do that through our weekly classes, of course, the emails that we send out. And the goal is just always not only keep you engaged, but teach you something along the way. So I hope you learned something from the show. If you do, maybe you'll check us out at jazzwealth.com. I do appreciate that. Anyways, let's talk about what we've got going on here. Playing a game. If you want to play a game, you tell me where you think the Dow will close next week. If you're the closest without going over, we'll send you a $100 gift card. Or if you're one of our customers, we'll credit your account there. We've also are highlighting a jazz artist of the week to kind of, I don't know, just kind of cover, our namesake. We like jazz music around here. Our jazz artist of the week is Brian Bromberg. If you've ever seen a guy try to play the bass, boy, this guy can play the bass. Stand up, electric bass, slap, you name it. He's incredible. He's got a song called Thicker Than Water. It's kind of a laid-back song. Maybe you want to listen to it tonight when you just sit back, grab a glass of wine or something, flip on your Netflix and whatever you're watching. Just, kind of ease into the evening. Anyways, let's get started here. You got the Dow lower by 328, 28 lower on the S&P, and 38 higher on the NASDAQ, and the NASDAQ's even higher after hours here. We start the week a bit mixed. I think it's totally normal, to be honest with you, because we got earnings season really kicking off starting tomorrow with the big banks. And so a lot of investors are like, yeah, I'll just wait. I'll just see what earnings has in store. Because remember, this earnings season is going to be covering the effects of the virus. Last earnings season did not cover that. Last week, we saw our seventh best weekly gain for the S&P 500. We highlighted that in our Notes from Jazz email that we send out every weekend. Gave you some of the stats and things like how does the market perform going forward, so you know what to expect there. Also, the second time in 3 weeks that we've had a 10% plus gain. That's an entire year's worth of gains that we saw all in 1 week there. So very interesting there to check that out. If we go over to the stock market, there's the S&P 500 on your screen there. We're at the halfway point here, right? The S&P basically down just a little bit today. Not a big deal. I actually liked it. It's pulling back a little bit. We rattled off a whole bunch of names on Friday and different sectors that were already extended. I kept saying extended, extended, extended. So to see it pull back here, I think is totally normal. The NASDAQ was the strongest of the day thanks to Netflix, and even after hours, it's up over 110 points, by the way. So that's 1.3% on the NASDAQ after hours there. The Russell 2000 was the weakest and continues to be the weakest. It's lagging behind a little bit. This is a very sensitive area to the economy. So when people feel strongly about the economy, you'll see the Russell outperform. Right now, people are a little bit unclear as to what the economy has in store, and so because of that, the Russell lagging behind. If we take a look at the S&P here, we're at the halfway point, right? We have officially recovered half of the declines. Doesn't really look like that, and we've covered a lot of ground in just a couple weeks there, but here from the highs all the way down to the March 23rd low, we're basically right at the halfway point as indicated by my solid black line there. And so the question remains, is the glass half full or half empty? Is this stock market getting stronger, or is this just a little bounce before it gets weaker? JP Morgan happens to say that the stock market will be back to these highs by early next year. Rather bullish call there. In fact, there's a lot of bullish calls out there. Goldman Sachs was telling their clients in an email that because the Fed will do, quote, whatever it takes, they feel like this will just work itself off. There'll be no big deal moving forward, and we are not making new lows. They flat out said we are not making new lows there. So we find ourselves still stuck at the halfway point, but the good news is we won't have to wait for long because, like I said, starting tomorrow, we've got big earnings coming up. I'll go over a whole list of them that are reporting tomorrow, and we'll see what happens from there. As far as the recovery, we currently have a V-shaped recovery, which is never what you want if you're a long-term investor. It's fun if you're a short-term trader, but it's never what you want to see if you're a long-term investor because the V-shaped recoveries tend to consistently be volatile, and they have a tendency to go back and test lows again, which I know a lot of you would rather not see if you can avoid that. Like I said, last week was the 7th best week on record for the S&P 500, 12.1%, best week since 1974, if you're looking back calendar years just to see. The average performance going forward for this, if we look at the 10 best weeks on record for the S&P, the average performance is a positive gain of 1.69%, and 6 out of those 10 times it was in fact positive. The down moves were not all that negative, so that lends credit to the positive gain there. Anyways, that's what we've got there. Let's go over and talk about your sectors here. Like I said, I mentioned a bunch of sectors last week where we said did good today but extended, did good today but extended, extended. Looking through a few of those, you saw them pull back today. Utilities got all the way back to the 50-day moving average. They did pull back. REITs pulled back. I believe this was the worst performing sector out of the group today. 4.5% to the downside. Had a great run last week. Just ran up a very, very steep hill. Needed to take a break today. I don't mind. Home builders pulled back 4.5% as well. And basic materials at the 50-day moving average, they pulled back a little bit as well. Now, if you want a pullback and you want to buy strength, if we get this pullback, where do you look? If you want to buy the weak stuff that's still discounted and you feel like there's some room for that to bounce, where do you look? So what I've been doing is breaking down the different sectors in different ways so that you can see. I'm going to continue to do that in various ways here, and I'll start by going back to last week's chart. Here is the chart of all the different sectors in the market. I think there's one extra included for you, and how much they've recovered of their virus declines. So the red dotted line would be the top of the virus decline, and the 0 line down here would be the March 23rd low. Which sectors had recovered the most and which sectors recovered the least? Well, you know that healthcare and utilities were the strongest in terms of recovering that decline there. And so if you're looking to buy strength, you'd be looking for pullbacks in healthcare or utilities, possibly consumer staples, and if you like the real estate that fits your account type and everything, then maybe you're looking at that. If you like weakness, you're looking at energy and transports. Interestingly enough, on Wednesday, I got a video posting about how to pick stocks in a stock picker's market. And I'm going to use an example from transports. It just hit off the top of my head. I just thought of it, so I did a whole zooming in sort of a top-down analysis for you on Wednesday's FinTips videos if you want to check that out. But this gives you an idea of what you could buy if you're interested in strength, what you could buy if you're interested in weakness, or if you want to build a portfolio around strength and weakness, etc. Now you've got some ideas of what to do there. We go back over to the stock market here. Transports pulled back as well on the day, down 2.2%. That video, like I said, is going to cover a transport stock in there. Today, FedEx was the standout in that category. FedEx got an upgrade from Bank of America in what was the most complicated upgrade ever that I've ever seen. They used all big words. They used all kinds of acronyms and stuff. Horrible. I certainly understood what they said, but to the average public, they had no idea what Bank of America was trying to say, other than they upgraded the stock, so it was up 1% on the day. Other than that, transports were mostly weak. If you look at semiconductors, down 1% on the day, flirting around that 200-period moving average. There's a couple names in the mix. You got Intel. Intel's in the mix there. NVIDIA had a good day, 2.6%. AMD, good day as well, 5.29%, hitting back to highs there. Year to date, these are all performing better than their benchmark, which would be the semiconductors there. I want to pull that up for you, so if you'll give me a second. What I want to show is the semiconductors performance versus NVIDIA, Intel, and AMD as well. So I'll just put this up here for you to see. We've got this chart here. We're going to show percentage, and let's go year to date. So, the sector itself, the purple line is going to be the semiconductor group. It's not a sector. So semiconductors down 11% year to date. You can see that these stocks all outperform them. You've got Intel here, you've got Advanced Micro Devices, and you've got NVIDIA all outperforming their little sector. So it's not always that you look at which stocks outperform the market. If you're invested in a particular area of the market, you're really more interested in which ones are outperforming that area. What the market does is made up of all kinds of different stocks, but you want to know what's made up in that area. If you happen to be looking at this now, if you go long term, you're going to find that Intel lags behind. So notice how the blue line goes below the purple there. That's Intel lagging behind because it's not a very volatile stock. So if you're looking for volatility, you've got to know how to spot these things. You've got AMD is volatile, and NVIDIA are the more volatile names. Intel not as volatile. Obviously, you're going to get your dividend or whatever, but it's going to be less volatile. It will lag behind the sector in the long run. I'll just kind of go back a little bit further. If you want to take a look there, you can see how Intel does tend to just track to lag behind slightly, whereas the AMD and your NVIDIA are, of course, more volatile there, if that's something that you want to take a look at. So I just want to point that out in the semiconductor space. Financials pulled back today about 3.6%. I love this, right? The fact that financials are pulling back. Why? Because they were so extended in the short term. You don't want the sector to be extended into earnings if you'd like the earnings to be positive. If you're a bear and you want to play to the downside, that's a different story. But the fact that financials are pulling back, it gives them a little breathing room to maybe springboard off of some good earnings. I don't know if earnings are going to be good for these guys, but we'll see what happens there. So I prefer to see that when a sector pulls back into earnings if you're thinking more on the bullish side. Oil down 1.4%. OPEC, we agreed to 9.7 million barrels per day as far as a cut through May and June. After that, they're going to go down to 7.7 million barrels per day and then 5.8 or something going into next year. The argument there is, number one, it's less than what we wanted. And number two, does it matter? There's still so much oil out there. It's incredible. There are two things that the world has right now, oil and who can guess it? I'm not going to say it because then YouTube won't let me keep this video up, but it's, the thing with the, that thing. Anyways, there's more of that on the planet than anybody needs. And so right now the demand is low for oil and the other thing as well. And there's just so much supply out there that the assumption is the cuts aren't really going to do anything at all. Looking over through some of the other little categories here, gold miners almost back to 52-week highs. You know why? That's going to be all Newmont. Newmont is I've been saying the darling of the sector. Now I'll say it is the carrier of the sector because they've just been killing it. It makes up 15% of the GDX, if you happen to be looking. Had a 4.2% gain on the day. Interestingly, I'll give you some stats. Where Newmont is at right now, starting tomorrow, Tuesday, Wednesday, Thursday, Friday, Monday. If you go over the next 5 days, whenever Newmont gets this extended, the average performance is a down move of 1.17% over the next 5 days. In fact, whenever it gets this extended, that next 5 day period is only positive 35% of the time, meaning odds are it's going to pull back. We'll follow those stats with you going forward just to see. You guys hear me spit out a bunch of stats. It's nice when I can show you that that's what people look at and that's what works. Healthcare, back to the 200-day moving average. Remember, this is the one that had the biggest, sharpest, and fastest V-shaped recovery. So that would be the strongest out of all of them there. Healthcare, of course, now extended in the short term there, and you know that. I've already pointed that out. What else? Oh, can I go back over here real quick? I'm sure I can. It's my show. There we go. Sector performance since we hit the virus lows. Here's another way to look at it if you like. We're testing out some new charts and things, so I'm going to share this with you. We've broken down since March 23rd until today. This is as of today. And then we organized each sector to show the best performing areas there. I don't know if you can see that too clear. I hope you can see that clearly. XLE. The best performer, 44%, all the way down to the bottom, communication services, 15%, and everything in between. Consumer staples, 19%, tech, 21%. Hopefully you can see that breakdown there. So it again gives you another way to look at, am I interested in riding strength and being a trend follower, hopefully, or am I interested in buying things that are trading at a discount? So I hope that helps you out there. Moving on, let's go over Intel. Speaking of Intel, we mentioned that a minute ago, one of the outperformers today. Intel, the CEO says that overall demand has picked up. He thinks it's because of the people working from home, demand for the chips, processors, and everything along the way. So that's good news for them, and that helps. One of the reasons that those stocks were higher today. eBay. Got a boost today, 2.75%. They found a new CEO. The CEO is the former COO of e-commerce from Walmart and then from Sam's Clubs as well. So they see that as a very bullish thing there. Good for them. We'll see, right? So a nice strong move there back into a technical consolidation area. So you expect to see a little bit of chop going through in the short term here. Dexcom. Guys focus on diabetes. Cool little products, by the way, if you ever get to look them up. Dexcom was basically flat on the day. They're going to replace American Airlines in the NASDAQ 100. American Airlines down 7% today. I hear the airlines aren't happy with the free money that the government is giving them. Okay. 16% of the S&P 500 is above the 50-day moving average. It's not as much as we had Friday. A little downtick there. 4 new highs on the day. You could probably guess one of them. Newmont is one that made new highs. You also had Netflix up there in the mix. If you want to take a look. You got Netflix, new 52-week highs. That one we've been mentioning, showing that strength, right? There's a little bit extra strength, relative strength, compared to the markets there for Netflix. Added 7% on the day as that one broke out to new highs. And then you have some of the familiar names. You got Dollar General just flirting around up there, looking pretty good. And just barely poking to new highs as well. There were 0 new 52-week lows on the day. We'll let that catch up. The computer's not ready to start the week here, I see. 0 new 52-week lows. The closest to those lows, it's going to be Franklin Resources. This is Franklin Templeton, the asset manager there. It's got 5% to go before it hits new lows. And Walgreens Boots Alliance comes in second place with 12%, meaning if it falls 12%, it will be new 52-week lows. Those are the two that are closest there. Okay, let's go through a list of stocks that are adjusting or making news because of viruses, what's going on out there. The Outside the Virus show we posted at 3 o'clock today on YouTube. We're going to do that every day. Just news that's outside the virus. Here on the Closing Beat, we're covering news that's affected by the virus there. First up, you got Disney reached a deal to furlough 43,000 of its employees. Also kind of good news, we covered this on Outside the Virus. 50 million plus paid subscribers, right? And so what I did is put together a little chart. We'll share it with you here. You can read through it when you would like to. But on the right-hand side, you can see Disney's segments revenue broken down by segment. Parks and products, that would be things like your theme parks that are currently closed, the products they sell in those, the experiences around the parks, Disney Springs, all the Disney Boardwalk restaurants, things like that, hotels, etc. Media networks, you got ESPN, things like that. Studio entertainment, that's going to be your movies, your big blockbuster hits that they've got going out. And direct-to-consumer is Disney Plus, or is partly Disney Plus. Direct-to-consumer makes up 12.5% of their overall revenues. With 50 million plus paid subscribers, you got to imagine that's going to be ticking higher there, maybe starting to be the dominant area of the company. Think Apple. I used the example earlier on Apple. They used to sell hardware. It was phones and iPods and computers and things, and now services is bringing up the back end, now at about 24% of their overall revenue. So Disney Plus kind of going down that same path. You saw what happened with Apple. I'm not saying that's maybe the stock you want to buy, but you get the idea there. Just wanted to point out how Disney's revenues break down as a percentage of segments there. All right, JP Morgan in the news, they want to increase the borrowing standards for mortgages, meaning they want to make it tougher for you to get mortgages. Tapestry extends their closures for their stores basically to the end of the month. Tapestry to the end of the month, stock's down about 6% on the day. Oh man, you're not supposed to touch your face. Boeing down 3% on the day there. They're in talks with banks and other companies about getting some financial assistance. Also, they're going to be cutting their workforce by about 10%, trying to save on payroll costs there, and we'll see what happens there. Landry's. You know Tillman Fertitta, we talked about this on the Outside the Virus show, but Tillman Fertitta he owns Landry's, the Golden Nugget, a bunch of restaurants, things like that, which fall under the Landry's brand. Rainforest Cafe, Morton's, good restaurant, Morton's there, and Bubba Gump, things like that, and all the Golden Nugget ones, of course. He's offering $250 million. It's like Shark Tank out there. He's offering $250 million in debt, for those of you that want to buy it, for a 15% interest rate. Another example of corporate debt making its way to the market, and probably already gobbled up by now, but 15%. And he's got a special deal. He won't actually be able to pay that loan back early until 2 years has passed. So that's a 15% return for the next 2 years because he needs the money. I mean, I like the guy personally, but you can't think of two worse businesses to be in if all you could be in was two businesses. Casinos and restaurants. I mean, he is shut down. I mean, that's unfortunate. Other news here, you got AMC. This is the movie theaters, of course, hitting new 52-week lows, down 20% on the day. They have hired lawyers to explore bankruptcy. That's not usually a good sign. That's never a good sign. Burlington down about 6% on the day there. They furloughed most of their store employees and are cutting back their distribution unit as well. Royal Caribbean and the cruise liners had a down day today. 17% on Royal Caribbean. And Norwegian Cruise Lines down 13% on the day. The CDC has extended their no-sail order 100 days, right? So that's affected those cruise liners. Carnival Cruise not affected as much because they're more global than Norwegian as well as Royal Caribbean. Though they are as well, they're just not as global. And so that one hits that there. Okay, let's see. I think I covered everything there. I shared all my slides with you. Perfect. I will take a look at a few more things, and then I will take your questions if you happen to have any. We've got earnings season coming up tomorrow to start. It's going to be an exciting one. It's going to be a busy one. It's going to be one that causes a lot of volatility. So if you don't like stock market volatility, go watch Netflix for a little bit. I hear Tiger King is where you want to be. Just saying. You got Fastenal tomorrow before the market opens. Johnson & Johnson, JP Morgan, Wells Fargo, United Airlines, and JB Hunt. That's a transportation company. So you're going to get some excitement. I hope you're ready for it. So we'll see what happens there. You also got dividends coming out. If you happen to own the following stocks, today is ex-dividend day for AbbVie. ABBV is the ticker symbol, $1.18 being paid out there. ATVI paying out 40 cents, and Abbott Labs 36 cents as well. I will take your questions if you have any. Brianna, I haven't got your stimulus yet. I keep hearing they're trickling in there. I think you're maybe days away, if that, from getting your stimulus check if you, of course, qualify. Yep. Buy some debt, get some. Oh, and that Tillman Fertitta, by the way, he's putting in $50 million of his own dollars, like him personally. So him personally is investing so he can get a 15% return as well. Yep. Oh, yeah. I love it there. I am sorry about the little hiccup there. I don't know if that's internet related. I know our internet is running slow. Have you checked your speeds? I know internet runs slow right now because I guess a lot of people are at home using it there. But yeah, I'm sorry about that. Not much I can do there. We have Fios here, so it's all fiber optic, so it's not supposed to do that. Tesla reporting earnings. Yeah, basically, if you can think of it, they're reporting earnings. I know they had a good day today. 13% gain back to the 50-day moving average. That's an impressive day for Tesla. We'll see. They had a pretty clear path of what they were trying to shoot for. Now they've got factories sort of shut down a little bit, delays on new factories and stuff. I don't know how much of that's baked in. I don't follow Tesla as much as maybe I should, given how much you guys like this stuff here. So we'll see. I did want to check in on, we talked on Friday about Luckin Coffee. Did it open back up today? So it did not trade today. Well, it's not a good sign. Yep, still not trading. Yikes. We'll see what happens. How do you analyze how much debt a company has? You can look it up. Pretty much any free platform should offer financials that you could look up there. If you have a trading platform, Fidelity or whatever it may be, you can actually go in there and look at the fundamentals of a company if you want. You could break it down. Some are better than others in terms of how they display it, but yeah. Is whole life insurance a ripoff? Whole life insurance is very much intended for, at least initially, it was intended for a very specific person. It is not intended for general use. So it's kind of like leveraged ETFs. They're intended for a very specific use, which is outlined in their prospectus very clearly, but the general public tends to use them. I don't know if they set it up that way, but that's what happens. So whole life insurance is not ideal for the average person, right? Very much intended for a very specific sort of close to having enough for retirement and wants to make sure they have enough income type person. It's not a good deal. Compared to what other options you have, it's not a good deal for the majority of people. Thoughts on the Jets ETF? Yeah, that's one way to play the airlines there. This one comes and goes in terms of popularity. Most people usually don't look at this one. The typical volume for this one's pretty low. Average volume per day is about 30,000 shares. Lately, the average volume's in the millions. Right? And that's just because people don't want to try to pick an individual airline, but they realize the discount and they want to buy something, so they're looking for a little diversity there. I could understand using that. It's the only choice you have. I don't believe there's any other even close comparable ETF to play the airlines. Yep. I can't tell you whether you should scale back your portfolio. I could say that if you're a short-term trader and you get more than a 20% bounce over a couple week period, that would probably entice most people to say, I'm going to take some profits off the table. Yeah, I don't blame you for maybe thinking about that. But we'll see what you do there. I know you're pretty active. I think you're a pretty active person there. What about Kohl's? So Kohl's has been real active lately. I shared a couple charts with that in terms of having some of their bigger days there. Remember, this even though I point out the performance that it's had in the charts that I've shared with you, this is one of the sort of second tier, close to second tier retailers. This is maybe not if you had to pick one name, maybe not the one name you want to bet the farm on or anything on. It's a difficult one, I think, to assume that they're just going to recover, everything's going to go back to normal, you know. Yep. All right, I will wrap it up there. It looks like I did a pretty good job helping you out. If I helped you in some way, maybe you'll hit the subscribe button, give me a thumbs up or whatever that you do here with yeah, there you go, a little thumbs up there. Appreciate that. And you guys have a great rest of your day. We'll be back tomorrow to do this all over again. If you'd like, check out our show Outside the Virus at 3 o'clock every day. The goal there is right now, they're talking about the virus, so we're going to cover things that are going on that don't really make headlines. I have a feeling once the virus clears itself up, and hopefully it does very soon, it'll be election focused, so we'll just change the name to Outside the Election, and then Outside the Holidays, and then Outside the New Year. So it's something we want to keep doing every day. Maybe the name will change, but enjoy the rest of your day. Thank you so much for watching. We'll see you soon.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.